Good morning, dear listeners. It's another day in the financial world, and, well, there's plenty to chat about. I'm your host, Endrit, and thank you for joining us here on Capital Markets Quickie today. Now, let's jump right in. So, stocks pretty much hugged the flat line yesterday. And why? Well, we had some unexpected retail sales data that beat everyone's forecasts, which is always a nice surprise, right? Retail sales jumped by 0.7% in September, and let me tell you, that's more than double what Wall Street had predicted. It just goes to show that, despite the odds, the American consumer isn't backing down anytime soon. Now you might think, hey, that's great. But it only means that the Federal Reserve Bank has its work cut out and rates will remain higher for longer. Now about the bond market. The 10-year Treasury yield shot up quite a bit and even flirted with highs we haven't seen since the beginning of October. It's hovering around 4.85%, which, if you remember, came close to its 16-year peak earlier this month. Earnings season? Oh, it's just getting started. But so far, things are looking pretty promising. Signs point to corporate America possibly waving goodbye to the recent earnings slump. And speaking of earnings, keep an eye out for results from big names in tech like Tesla and Netflix coming out today. It'll be interesting to see how they've been faring with those higher borrowing costs. And a quick word on oil prices are holding steady for now. The U.S. is ramping up its diplomacy, and there's some buzz about easing sanctions on Venezuela. Last I checked, crude oil's price was comfortably above $86 a barrel, and Brent crude was teasing the $90 mark. Alright, that's the quick lowdown for now. Make sure to join us tomorrow on a brand new episode of Capital Markets Quickie. This is Endrit signing off.